And we're recording this presentation.
Sorry, that was me.
Yep,
that was me.
So yeah, there's the option to leave the meeting, but yeah, just keep your video and everything off and whatever if you you don't want to be on television for posterity. Okay, so what we're going to cover today, I'm going to do a little bit of a presentation that looks at what is environmental accounting, just to unpack that a little bit. What's driving it and why is there so much interest and action happening at the moment? What's the difference between environmental accounts and markets and accreditation? And I think that's something that we mix up a fair bit. Often you look at, you have presentations, you don't understand, you know, which one of these they're talking about. And so I think it's important to understand the difference. How do these markets and accounts, how do they work? Who are the players involved? And what does it mean for farmers and Landcare in our region? And what we want to do, this is it is a discussion. So I'm going to present some stuff, but we're really interested in your feedback because we have an opportunity through Landcare Australia to pursue a further project. And I'll discuss what we've been doing so far later on. And we really need to know what you guys want, what you don't understand, do understand about it, and how we might take that forward. So we've got opportunities out there. Okay, so let's kick off. So what is environmental accounting? Look, basically the concept is that you're managing land and you're also managing environmental goods and services that people value, and the public, the industry, government put a value on those. We really care about the fact that farmers are, looking after the trees the superb parrots live in, where we like it that our farmers are sequestering carbon, to offset our, driving around in cars, that sort of thing. So the public really value these goods and services. And environmental accounting is a tool that you can use to try and monetize that value. So turn it from an intrinsic value that people really like, that people are doing these things, into something that is extrinsic value. So it's, it's got a either a monetized value or something that you can trade. And what that environmental accounting and using environmental markets enables land managers to able to earn an income from those goods and services. And that in turn drives change. So if it's an income, a potential income stream for a farmer, then there's an interest. It drives the change of practice to meet those criteria and get those credits and be able to earn that income. The environmental account itself is the same as any other account. It's a ledger that identifies environmental assets, their condition, and that sort of thing. And then environmental accounts can be developed at different scales. So you can do one for a farm, you can do one for a district, a region, or an industry. And so with an account, you set the boundaries of what you are describing and what you want to measure. And I guess it depends on what you want to use that information for, as to how wide and far you take that. The environmental account is the basis for measuring changes. So the account sets up, the assets, their current condition, and through methodologies in the market, you can measure change, and that creates credits or debits in that account, and these could be used in the marketplace. So the environmental marketplace is where you take your account and your credit, and what do you need, for an environmental marketplace to exist? So you need to agree on the asset, the environmental asset, good or service that's there. You need to agree on the methods of how you're going to measure it, because everybody has to be doing the same thing. You can't, have different, the players with, with different benchmarks, I guess. And that's how you establish your account. So the things you're actually going to measure. You need a means of transaction, so the currency in the market, which theoretically becomes these credits and debits in environmental services. And you need a supply and a demand to create value for them. So that, it's my understanding of economics anyway. So these things, they don't generally just happen, although they can. In general, there's some sort of intervention in terms of policy or a government or, a corporation or something, drives these these markets to exist. And we'll look at some examples of that later. So there is a bit of a difference. So you hear a lot environmental accounts and natural capital accounts. And look, this is something we are grappling with a little bit too, but they are slightly different things. So an environmental account is the actual measurement of assets, you know, the services, the goods, whatever, and their condition. Whereas a natural capital account is generally used at a broader scale, and it measures what the economic value of that asset is to society. So it's more dealing in you know, not a money capital, but a natural capital entity, and it calculates the stocks and flows in these services and gives them a value. And so natural capital accounting is something that's more used in economics. Now, I don't pretend to fully understand that, and that's something that we'll be, you know, trying to get more information on. But what we're talking about today is generally these environmental accounts that we can measure and value at the farm level. So what's driving all of this interest all of a sudden? It's global, is the first thing to remember. And it really is driven from that high level. There's a societal need or expectation for environmental accountability. We reckon we know we've got problems. We need to be fixing things, and so that's a really broad view that must be in most of the population, because that's what we've gone ahead and tried to act on it. And the way that we act on it in general is driven, you know, at the international level. So through international policy and UN UN targets. The main one driving is these sustainable development goals, which a lot of countries signed up to in, I think it was about 2015. And so there is social, economic and environmental goals built into them that now those signatory countries are required to do something about. And it's the government compliance with those international agreements which drives, you know, some national policy. I was going to have a little joke here that I couldn't think of a national policy on environment, because you know, the pressure on the government at the moment to have a 2030 target is, you know, because in the absence of policy, it's really hard for markets and things to develop. And so, yeah, there is a bit of a gap at the national level in Australia at the moment. But, you know, we see at the state level, so in New South Wales, we have a net zero target here, which drives one type of environmental market, which is the carbon market. Sorry, it doesn't drive it, but it creates the environment in which markets can happen. There's also, you know, private companies and corporations are looking for sustainability credentials, and that is about their own social license. It's about access to markets in some case. It's about branding. It's about a lot of things which might talk about down the track. But there is pressure on those companies to also have some sort of measure and be able to have an account as to what their environmental record is and what the account looks like. The banking and finance industry, you know, are in that bucket as well. So they are also driving it with, you know, requiring of their clients and where they're investing their money, they want some assurance that they've got some sort of sustainability measure and credentials. And that drives industry-wide targets. So in Australia, you know, we have, there's a real threat to the agricultural, the beef industry or the meat industry, in that, you know, we may be locked out of markets if we don't have some sort of credibility to do with, you know, carbon emissions. And so that's driven agriculture to actually come up with targets and try and drive change internally. So things like the carbon neutral 2030. And all of these things, you know, they influence supply chains and they influence consumers, and that all lands on producers, I guess. At the base level, that's where you can have, you know, an environmental account that means something. So yes, it's all very global and big picture as to why this is happening. And you could be cynical about it, and, you know, with access to markets and things, it's a tool people can use politically. But overall, this is the picture. Now, the one thing I wanted to cover was the difference, or the, you know, couple of a couple of things that are used interchangeably in a lot of presentations I see. So there's one thing that is environmental accounting, which is then used to be able to work in credit markets. But there's also a lot of accreditation schemes, which is a slightly different thing. So an environmental accounting and market involves the account being measured outcomes, whether that be on the farm or, in a region. That's used, with established methodologies in an established market to have credits or debits. And if you've got credits, that is potential, you can trade it and gain an income stream into the business. So that is very different from accreditation schemes, which can be about a lot of things. They can be about accessing, particular markets or marketing your product to consumers and branding or access to capital, but they generally are about practices rather than measured outcomes. So, I don't mulese my wool, therefore I get the non-mulesed wool stamp, that sort of thing. And I've just put up a few examples here that there are millions of them. And some of them are just, are brands that haven't got a lot of, measurement behind them. But a lot of them, have a process of auditing where producers might, tick boxes at the market, that they do certain things and they're able to have that stamp on their product. And then there's an auditing process overall. So most of them are practice-based. The exception to that is the land to market accreditation, which actually is an outcomes-based one. So it's an actual measurement on farm and you benchmark yourself and then you can shift your position and participate in that accreditation program. There can be crossover, absolutely. So an accreditation schemes, you could get the stamp and, the price of getting the stamp is your credits actually go to that organisation, which are able to trade them. I can't think of any specific examples of that, but there are, that is a possibility. So they can cross over, but they are different. So, yeah. So, again, so environmental accounting, we're talking about measured outcomes, and accreditation schemes are more about maybe ticking boxes on processes or practices. Now, in terms of these markets, so we can have an environmental account that sets the picture of what we look like for particular environmental criteria and use that in a market. So with those markets, the general environmental market for things like biodiversity credits, those things we hear about, are very young. There actually isn't a market really that we can trade those things as yet. So it's a very young sort of thing that's just beginning now. But one of the environmental accounts, which is the carbon account, is very well established. And so I was going to use the carbon example of one environmental account to just sort of work through how they work. And so this is the example of the carbon market in Australia. So we have a regulated market that is, is driven by a particular bit of legislation that creates the market and some methodologies and things. And then there's the secondary or voluntary market, which is more a sort of private market outside of government. So the regulated carbon market in Australia is the Emissions Reduction Fund. So some of you, probably know all this already. So that is mandated, that's a government initiative. There are approved methodologies by which people can generate credits in that carbon market. And those credits are called ACCUs. And you can then sell those ACCUs within the government system. So ERF actually runs a reverse auction, so the government actually buys the credits. Or you can sell your ACCUs into this voluntary or secondary market. So in the voluntary market, it's still the same process. You've got to agree on your asset, you've got to agree on your methodology and how you're going to generate those credits. But rather than being a legislated thing, there are sort of agreed methodologies between the parties that can generate credits within particular markets. And they can be bought and sold. So an example of this is like the Wilmot Cattle Company recently, who did the big deal with Microsoft that we all heard about through the land, that sort of thing. So Microsoft bought carbon credits from that company. You know, it was an agreed methodology, not an emissions reduction fund methodology that they used. And so the buyer of the credits, who was Microsoft, they accepted the methodology and the process of generating credits through a particular method, which I will flash up later. The Wilmot Cattle Company were able to sell credits directly to them. So it's not part of this emissions reduction fund. With both markets, there is audit and compliance within those methodologies. So you can generate your credits, and there is a checking process to make sure that that's real and that is a continued thing. Because when you sign up, especially for carbon markets, and it's very likely that in other environmental markets will be the same, it's long term. So carbon now, you sign up for 25 years, and it used to be 100. They've actually brought it back. So, and some of the methods, it's still 100 years. So it's a really long-term prospect, and any sort of biodiversity markets are probably likely to be similar. So, you really do need the audit and compliance over time to make sure those credits are real. So that's the carbon market. And as I said, the biodiversity side of things is really undeveloped at the moment, but we actually do have a very regulated market for biodiversity in New South Wales. And I just wanted to talk about that a little bit. And that's the Biodiversity Conservation Trust. So their offsets program is really an environmental market. It only operates within New South Wales, and it's very regulated and dependent on government legislation, etc. But it is a market, and it has a methodology called the BAM, which is an assessment process, which is a way that you look at your vegetation and give it a value. If you knock it down, you're in a debit. If you improve it and increase the extent, it's a credit. And so developers who need to knock down vegetation, they accumulate sort of debits in the system, and then there's an ability for them to buy credits from other landholders. It's quite complicated, so it's not that simple, as you can see all these lines going everywhere, but it is a form of environmental market, although it is very limited. So they do exist, and what we're being told is that this is the future, that this is going to be how the market-based instruments is going to be how we will get a lot of land use change in the future. And that, which brings me to the new Australian government policy. David Littleproud made a commitment in the last budget to this agricultural biodiversity stewardship package, which has got a few components. I'm going to get rid of this. Hold on. Oh. All right. So there's a component about a carbon and biodiversity pilot. So what that is, it's trying to get more people to participate in the carbon market. And what the government's done is said, actually, we're going to recognise the co-benefit of carbon projects in biodiversity, and that we're setting up a system of which you can get credits and stewardship payments for biodiversity on top of your carbon project. So that has been piloted in various regions around Australia, but not ours. So that's why we haven't really seen that come up as an option for landholders here. But we could, if the pilot's successful, it may spread. This one has been announced and we've never heard of it again. So I'm not sure what is going on with that. But the interesting one is this biodiversity trading platform. So the government has made a commitment to trying to set up a platform like the Emissions Reduction Fund for carbon, actually having a platform for biodiversity. Now, I don't know where that's at. I think there's a lot of, some of the universities are looking at methodologies and all that sort of thing at the moment, but it's really hard to find information. But that's clearly coming. There's a budget commitment to it. And that will be a game changer, I guess, for farmers and agriculture if there is that market potential. So that there is something coming in the regulated market from the Australian government. The other thing that's happening is the certification scheme. So there was a lot of consultation last year, might have been a part of it with the National Farmers Federation and Australian Farm Institute about an Australia-wide certification. So that's in recognition that we probably, we keep calling ourselves clean and green. We actually need a system of which we can certify people that, yes, you are clean and green. That's a very simplified version. And Neil, you're probably online here and know a lot more about that. But it's showing the difference too about the certification scheme and actual environmental accounts and markets. So they are different, and there is a lot of confusion between the two, I think. Anyway, that is coming also. So I'm going to talk now about some components of those markets that are important, I think are important. And the first one is a bit about brokers and aggregators. So actually back in this diagram, this big blob here, brokers and aggregators, they're actually a really important part of this market. So there is an issue with scale sometimes that, the current price of carbon, you need a lot of it to make it worthwhile to participate, because all this audit and compliance for your methodologies costs a lot of money. And so if the product, which is carbon credit in this instance, is not worth enough, makes it hard to participate. Now, what brokers and aggregators can do is make it easier to participate. So the way they do that, these guys are able to pool credits, I guess, and take some of the risk out of it for individual landholders. They can get, some good economies of scale in terms of measuring and all those things. So they can be really good at making it easier to participate in some of these programs, but they also take a cut out of it. So, obviously they've got costs that they've got to cover. And I just picked a few out of the millions and trillions of carbon, trading companies and associated little companies that do parts of the process that are out there at the moment. AgriProof, something we have had contact with through the Soil Key. There's landholders in the Upper Murray that have got contracts. Country Carbon. So they actually have an office in Albury, but I'm not aware of any local projects, but they are around. And we talk about Carbonate is a company we saw in relation to the Wilmot cattle deal, as is Impact Ag. So all these guys act as brokers. So that can be a really good thing, but you've got to recognise that they're taking some money out of the system because they've got costs. And, at the cynical end of the opinions, these guys are the ones that are making the money at the moment, not the producers. So it's good to go into contracts and things with eyes open about how these organisations work. The other one, there are some companies that do direct offset. So what they do instead is take money. So you might tick the box that says, I want to offset the carbon in my flight to Sydney or something. And it'll be one of these sorts of companies, of which these two are just examples, that will go, they take the funding and then they use that to actually, plant trees or do sequestration projects and trade that carbon themselves. So it's not a contract directly with a producer or like that. So Green Australia does a lot of that, and so does Greenfleet, and so are a lot of other companies. So these are just examples. There are millions of companies. One that you might have heard recently has been doing the webinar around is Andrew Ward from Ethical Fields. And what his idea is that we create a cooperative of farmers to be one of these brokers. So it does the same thing, but it just means the money stays within that farmer group that form the cooperative. But they are essentially a broker. So he's doing the rounds at the moment and talking a lot about environmental markets and how people might get into it. And they're going to be, Ethical Fields are probably going to be, pretty big players in brokering deals and things in the future. But this Farmers Mutual idea, that's what it is. It's to create one of these brokers, but actually it's like a social enterprise, and that profit comes back to the cooperative instead of going into the pockets of one of the corporates. So that, there's lots of things going on with brokers and aggregators, and I even found a broker of a broker. So you can go to websites, you can put in your project and it'll match you with brokers around the world. So, it's a space, there are millions of little companies, and it's very complex the way things work. These companies all have associated companies that help with the measuring and auditing and that sort of thing. So, yeah, it's all very quite confusing. And what we see is these guys actually giving talks like this quite often, and it's good to know where they fit in the picture, because they are selling something. But it can also be a very positive thing, as long as you read the fine print. One of the things you might notice about this, if you're not in the regulated Australian ERF, who's buying the credits? These are global companies. So the credits are, the credit market is very global. It's not about Australia. I don't know whether that's a good or bad thing, but it's just something to remember. So a bit about methodologies. There are two ways to go. You can direct measure or you can model. And at the moment, we're at most of our methodologies in these either biodiversity or carbon markets are all about measurement. So it's real, like you have to, go out, do your surveys, you have to measure carbon in a certain way. So the pros of that is we know it's real, so that carbon is real, or that, that biodiversity benefit's real, but it's very expensive to participate. Those methods, you require experts, get consultants, and that's another growth industry, is in consultants to be able to help you through that process. And again, at the current, you've got to weigh that up against what the benefit is in terms of the value of those credits. There's a big push towards trying to get more modelled methodologies. So these are ones that use data that's out there to assume that if you take on this practice, then this is probably what the carbon you're going to do. And if you tick that practice, then it makes assumptions about what the credit benefits are for certain things. So models are only as good, you put shit in and you get shit out. So I think that's good to remember. And what we need, as data becomes more and more available, that those models will get better. But at the moment, they're not the preferred method of most buyers of credits, because we don't have, you're ticking off on assumptions more than real actual measured outcomes. So the methodologies are there to go look at. So there's the Emissions Reduction Fund. You can go to the website and have a look at them. There's land ones, industry ones. So the soil carbon methodology, for instance, all that says is, thou shalt sequester carbon, and you'll do it in this way and you'll measure it this way. It doesn't say how you do that. It's all about the methods of measurement and showing change. So that's the other thing to remember. So you can't just do a practice and assume that it's going to. You've got to go and measure it. As opposed to the regen network method that the Wilmot Cattle Company and Microsoft did the deal over, is more about a practice. You tick that box and there's assumption about what will happen. And if the buyer and seller are happy with that, there's no reason why you can't do that. The Biodiversity Conservation Trust, the other one. The other one that we've been playing with a little bit is this Accounting for Nature framework, which is Accounting for Nature are an organisation, they're scientists, and they've seen the need that there's not a lot of methodologies out there for biodiversity. So they created a company, a not-for-profit company, that works to be provides a framework in which you can get methodologies for biodiversity. And so we've been playing with that a little bit, which I'll just go on in a minute. But yeah, you can read all about that there. So there's just a few of the players. There's going to be heaps of these come out the woodwork over the next probably 5 years, lots of, new companies with methodologies and that sort of thing. So we're at the start of that process at the moment. Another concept that people need to know is about additionality, and this is very important for carbon, and it's likely to be important for some of the biodiversity measures and accounts in the future, although probably not as much. But you can't double count. So Australia, as a country, has an environmental account for carbon, and the reason why you can't count anything before 1990 is because it's already been counted. And so when they signed the Kyoto Protocol, that was our baseline. So you can't count stuff that's gone in the past, and that's that's a problem for people who have done all their work already, that in terms of vegetation and sequestration, that potentially you can't count that towards your carbon account. But there may be other environmental accounts like biodiversity and things that you can. You can't claim things that is required by law. So that's in the ERF. So if you're a polluter and you by law cannot, thou shalt not emit methane from that industry, you can't then go, oh, I'm going to stop emitting, methane, and I'm going to put in a project and get paid for that change. Because if it's law, you can't do that. So that's something to remember. And the most important thing is that it's about activities that are done as part of a project. So you can't just count things that have happened anyway, certainly under carbon and potentially under some of the biodiversity measures. So if you go through a drought and you get this sudden big regen event and have got more vegetation, you can't sort of go say then, oh, I'm going to register that and try and get the carbon credits off of it, because it's something that you haven't benchmarked at the start and shown a practice change that has caused that change. So that's the additionality is a real issue with a lot of the carbon projects, and I can see that they're going to have to deal with that in some biodiversity markets as well. So that's just something to remember, and it does have implications for farmers who have done a lot of their re-veg and haven't got too much more that they're able to do, which is something we found out. Okay, so what does it all mean for Landcare and farmers? So out of all of this, what would be the first step? So we've seen, you can have environmental accounts, and we've got all these markets happening. We've got, carbon that's been around for a long time. We're potentially going to have biodiversity. What's a meaningful thing that you could do right now? Keeping in mind all those additionality rules is to probably start on an environmental account. Now how that account is developed, through, with aimed at some sort of methodology, and we can't answer for you what methodology you should use. So at the moment, we're investigating this accounting for nature methodology as a good all-rounder. But I guess from a farmer point of view, if you think you want to go to the extent of potential, playing in those markets in the future, then you do have to choose a method that, might help you get there. But an environmental account doesn't have to be used for the markets. Okay, what it can be used for is just to benchmark yourself, environmentally. And once you've done a few, it's about comparing with, other businesses or other regions. So it doesn't have to be used to, go forth and sell credit, potential credits later on or anything like that. But if you are thinking about that, then it's important to understand that you might do an account under one method, but if you go and sell in a market that's some other method, you're going to have to do it again. But look, it's a long way off, that sort of market situation. So what are some of the positives? It's accountability and transparency. So if you've got an environmental account and someone says, can you, what's your sustainability credentials? Well, you've got an account that can show this is where I'm at, and that account shows up, its strengths and weaknesses in your business. So there's the capacity to improve it, and it helps you make decisions about how to do that. And in the end, if there is these markets develop, then there's potential diversified income streams. So it means that, you might decide to keep a certain amount of vegetation on your farm, and there's a cost in terms of production there, and maybe stock numbers have to come back a little bit. Well, if you can get environmental credits to offset that cost, then it'll make the situation easier. So that's where it's heading to in the future. But as farmers, there are some things to remember too. So generally you can only sell it once. So especially with soil carbon, you're signing up for 25 years to 100 years. And once you've sold your carbon, if 3 years later down the track, a better deal comes up, you've already sold yours. So you've got to make a decision at some point in time about, the cost benefits of that. And you can't, with the, grant incentives and things, there's 10-year management agreements and you can sort of regroup after 10 years. But with these systems, you can't, it is a long-term thing. You're forward selling, and there's all the risk of that. So you have to keep proving that it's real. You have if you don't actually realise your target, so for carbon, you might put in a soil carbon target and have 10 years of drought and never realise that. So if you're participating in the market and you've promised that and you can't deliver it, you may be, you've got you're liable for it and you might have to go and buy it somewhere else. So that's a problem and it's a risk that people need to think about. And in carbon, certainly, the high cost of participation and auditing and all that sort of thing is not really offset by the current carbon price, which is, I think it's $16, although I didn't look today in Australia. But look, the carbon price is going to increase, I think. And in Europe, it's already $100. So that will change, but that's the equation you've got to think about, what's the balance. And the additionality rules, certainly for carbon, if you've already done it, if you've done sequestration projects like plant lots of trees, you can't count them. So it may limit the way you can participate. So there's all those things. For land care, it also means change. So we're potentially moving away from, traditional investment where, the government says we want to buy those outcomes. So we're going to give the money to land care to give grants and get the on-ground outcomes. I'm not saying that won't be part of it, but there is, we're reading the room here and saying, that there's going to be more market-based instruments, and that's clearly where the Australian government wants to go with it. It's going to create a platform for trading. So that's the way it wants these things to happen. So that means potentially there's new roles in this area for land care, and we've, tossed around lots of ideas. Could we be that? Could we be a broker? Not sure. Can we be agents for on-farm assessments of accounts and creation of simple accounts? Yes, we can, and we're already doing that. And the most important thing is about providing, being able to support the data collection, research, and extend that out to farmers so you can make informed decisions about how you might participate in these things. So what have we been doing as Landcare? So in partnership with Landcare Australia's Landcare Farming Program, we've recently put 10 producers through that, producing a carbon account for their property. And we've also, and another 10, some of which cross over, to start an environmental account under that Accounting for Nature framework. So they're two things that, were offered by Landcare Australia. So the carbon account is using the model developed by Richard Eckart. And it's the same model we used back in 2000 and whatever it was when we did the carbon farming project. So we actually did a lot of this modelling, back in 2012, 13, 14 or something. So that model, it gets data from farms and creates an account about, what your carbon emissions and sequestration balance looks like. Now that model at the moment doesn't have soil carbon in it. So that's another player that we'll come into in the future, but it really is about livestock emissions and sequestration. So that, the planting of trees and what you're doing on farm. What the outcome of that, so the 10 producers, I've all been through it, they've got their reports. I mean, the big, for us, the big lesson out of that was, in that, within that story of that carbon account, there weren't many levers where people could change their balance much, because they were already at a high end of practice in terms of livestock management. And yes, you could sequester more with revegetation, but there's the balance there about production and how much of your land you can put over to revegetation. So anyway, we're doing a lot. There's more work to be done there, and to look closely at the soil carbon. The Accounting for Nature framework, so staff participate in that, and we are looking at training to a accredited level to be a provider. And so the Accounting for Nature, it's only one framework and one methodology, but it is the most developed at the moment. And we have a bit of faith in it. It's a not-for-profit for a start, and it has some reasonable credibility with CSIRO and some Wentworth scientists behind it. So look, it's a great start and a great way of starting people on a pathway to an environmental account that looks at some of that biodiversity, vegetation, And hopefully we will have looking at having some input into some methodologies as well. Just on a side project, we're working with ANU, so we've got some good data about the veg change in subcatchments across our area from our investments, which is, I've presented a billion times, feels like, out of our 30 years analysis. And what we're doing in a little ANU have a model based on, that Southwest Slopes data and what the data that's out there on farms is to what the bird dividend of that vegetation change might be. And although that's, it's not, there's no methodology that, shows that at the moment, but it's starting to try and have some predictor tools that if you starting from this benchmark in terms of veg and you change it to this, what might happen in terms of biodiversity. And so those sort of things are interesting, in terms of, accounting for our region as well, and being able to show our impact and to predict what impact might be if we change things. And the other area that we are looking at is the soil carbon. And so we're seeing lots of claims about, we can sequester carbon and make this much money. It's like, for us, we see the Landcare role as actually putting some realistic figures around that. And I thought tonight, I'm going to hand over to Nick. So he's actually run some figures, because I think it's important that we talk about this, because it's been, people are talking about soil carbon all the time, and it's not even part of the carbon accounts that we've already done. And so, Nick, do you want to just talk to these couple of slides? We have a soil monitoring program, and what that gives us the opportunity to create some data around some of those monitoring that might be able to help people. You there, Nick?
Yep. Yeah. Can you hear me all right? Like, my internet's just starting to go a bit dodgy on me.
Yeah. No.
All good?
Good.
All right. Thanks, Kylie. So just want to touch briefly on soil organic carbon and what we can expect. Obviously, it's a requirement in a lot of the markets. So, this table on screen is of 32 monitoring sites that we established in the spring last year and the year before. That was funded by the Australian Government National Landcare Program. So it shows an average of soil organic carbon across 10 centimetre intervals down to 30 centimetres. And also in brackets there, that's the range, so the variability of soil organic carbon between sites. We've grouped them into different rainfall zones, as you can see in the first column. And then the average tonnes of carbon per hectare has been loosely calculated based off the ERF methodology, and use the assumptions, as you can see below the table, based on the bulk density of 1.3 and 0% gravel. So what that table shows is that it shows an increase in soil organic carbon with rainfall, as you'd expect. As rainfall increases, you get more plant biomass and soil moisture and biological activity, and therefore more carbon in the soil. And yeah, it's just a bit of a rough guide as to where your soil carbon levels are on your farm and what you can potentially achieve. Next slide, please, Kyle. I can't see them. Yep, there we go. So what can we realistically expect? That depends. So it depends on soil type, climate, like rainfall and management. Some people might be monitoring their own soils on their place and they've got a bit of an idea themselves. But the statement there's out of a CSIRO report And that's what that says is, yeah, so from what they found is that from pasture improvements that include fertilisation, liming, irrigation, and sowing of more productive species, generally has resulted in relative gains of 0.1 to 0.3 tonnes of carbon per hectare per year, and large gains of 0.3 to 0.6 in scenarios where you got conversion of cultivated land to permanent pasture. So we've found with our monitoring sites in other projects, we've found greater increases than that 0.1 to 0.3, but also decreases as well. And the big fluctuations that you can get, like there are limitations. There are limitations to measuring soil carbon, and they include things like seasonal variability and sampling methodology and analysis in the lab. So be aware of those things. At some point, soil organic carbon will reach, or your total carbon or tons of carbon will reach equilibrium. What that number is the $1 million question. So, but yeah, you can obviously increase it by increasing your plant biomass. So you're getting your plant residues cycling back into the soil, or root growth, or by adding things like manures or compost. So anyway, that's about all. We do a whole webinar on soil organic carbon and the methods and all that, but not tonight.
Yep. Yeah, and I think that's true. And it's so the sort of things. This is an example of what you've got to watch too. What our soil tests measure. What do they measure? So the total organic carbon, but for the methodology for soil carbon, you've got to convert it to CO2 equivalents. Yeah. And so,
and that raises a good point. There are multiple methods out there for measuring, soil organic carbon or total organic carbon. So, that's other things to be wary of.
Yeah. Yep. I have had examples of, some of the brokers and people, saying, oh, you can increase, your soil carbon by 20%. Someone's, were telling producers at one stage, and clearly you need to look at real data and make proper decisions before you sign anything like that, and have realistic expectations. And the same would be, said of any sort of, potential credits and things. Really read the fine print. And look, we see that as a way we can help, is to understand what data and what research we need to do to come up with those figures so you can make good decisions. So that's the end of the overview anyway. I'll just check the time. What have we got? Oh, yes, right. Okay, that went longer than I thought, of course. So I just want to open it up for some questions. I see there's a couple in the chat, I think. Here, so we've, Lucinda, you're pointing out that, accreditation schemes can actually be really robust. And yes, of course they can. And, Green Collar, I'm not aware of that as accreditation schemes, but I know they're a broker that do a lot of the measurement and things for a lot of the carbon projects. So yeah, I mean, the overall thing is, if you're seeing a company and they're trying to talk you into things, just Google is an amazing tool. You can go and find out who they are and how do they fit in that, in the function of markets. Are they brokers? Are they companies that help with the measurement? There are lots of players in the system.
Kylie, I'll just, if anyone wants to ask a question, you can just unmute yourself and fire away to Kylie or Nick or.
Yeah. Yeah, and feel free to put it in the chat too, even if we don't get to it, we can, yeah, we can try and answer some questions through our newsletter and things.
I have a question, if I may ask. At the bottom of the first slide, of the 2 slides that Nick was talking on, at the bottom of the first slide, it said something like increasing bulk density equates to increasing organic carbon. In sort of intuitively, I might have thought that would be the other way round, that increasing organic carbon, increasing organic matter, improved structure, decreases bulk density. That was it, bottom left-hand corner of that slide.
Yeah, sorry,
and I'm thinking,
Janet, so
that's almost counterintuitive to me anyway.
Yeah, and that's I suppose one of the I'll use my words wisely, but that can be an issue with the methodology, in that a more compacted soil theoretically will get a higher carbon level. But all that, what I've got down there is just saying that a higher bulk density, if you've got a soil that's got a higher bulk density, so in this scenario, like this example, this table, I'll just use a bulk density of 1.3. But if your soil type was actually 1.5, that your number in the last column there would be higher. That's all that's saying. And also with gravel content, I just use 0%. But if you had 5% gravel in your 0 to 30 centimetres, then you'll have a lower tons per carbon hectare number.
Yes, I've no problem with the increasing gravel content and decreasing carbon levels, because you've simply got less soil there, and the less percent organic matter. But I'm referring to the higher bulk density versus higher carbon and equals higher carbon levels. To me, that's counterintuitive. Higher bulk density, well, let's go from the carbon end. Higher carbon is higher organic matter, is improved structure, which is lower bulk density. That's the bit that to me it's inversely to what common sense would tell me.
Yeah, no, I'd agree. Yep.
All right, well, maybe you two need to talk the details.
It's more to do with the methodology, so
yeah.
All right.
I'm just questioning why it is, if there is any reasoning for it, or if it's a furphy, or if it's coming out through almost like a furphy from the method of measuring.
Janet, my understanding is that it's a volume to weight thing. So you can have soils that have a higher weight for the same volume. So potentially there's more weight of carbon within that sample than there is in a soil that has greater air pockets, which would be a lower bulk density soil. But I agree that, if you're increasing carbon, you're probably over time reducing the bulk density of your soil, which isn't necessarily a bad thing. It's just something that has to be factored in at the beginning to figure out how much weight of carbon there might be at the start.
Yeah, and carbon is measured on a per dry weight basis for soil anyway. Per 100 grams or whatever of dry soil. So merely saying your bulk density will give you more soil, well, carbon is measured on a per weight per 100 grams dry soil basis anyway.
That's right. So if you've got a higher bulk density, you could potentially have 1.5 times the amount of soil in that same volume, in that same area, in that same soil sample. So yeah, it's one of those things that I dare say they would have worked this out over many, many experiments.
Yeah.
So the take-home message there is about the complexity of some of these things. That when you start to drill down, it's a very glib thing to say, oh yeah, I can increase my soil carbon by 5% or something. But when you start drilling down into different measures and translate that across to CO2 equivalents, things can change, and there are assumptions and errors in the data too. Now, has anyone got any comments about general environmental accounting?
Carly, it's Rick Bull here.
G'day, Rick.
Hi, I just wanted to raise what I think is a bit of a paradox. We're we're all aspiring to achieve carbon neutrality on our farms, and if not, we should be. And I think that should be an overall aim of all farmers. However, to actually offset your carbon footprint, your soil carbon or your environmental assets might be the other side of the equation. In other words, offsetting your carbon footprint. And I'm a bit concerned with the promotion by the government and others that this is a financial opportunity for farmers to sell off their credits without first addressing their carbon footprint. And I think, you know, we're getting into a situation where farmers could be selling off a lot of their credits and not caring less about achieving carbon neutrality.
Kylie, I was going to say that in a completely different way and say that we've had a good look at this and we've done our accounts a couple of times. And we've come to the conclusion that we'll be using all our mitigation and sequestration for our own accounts rather than looking for, you know, to trade them. Certainly when the price is less than $100 a tonne, because when you do the figures, you can't really justify selling. But I think I was quite excited when we did the latest round of greenhouse gas emissions accounting, because I guess with all our tree planting, and your point is well taken, that maybe the government's taken all our tree planting historically and we can't count it on our own ledger. But you know, you can work out what the figures needed to sort of offset all your emissions, you know, under that sort of Richard Eckard tool.
Yeah,
I was much more excited about the biodiversity credits, but now I'm thinking maybe again they've all been accounted for, so we can't actually count what we've done in the past if that's the case.
well, that's not necessarily the case. So certainly with the Accounting for Nature framework, you are measuring against sort of pre-European veg condition rather than you know, where you are now. So there is scope under some methods that, yeah, that won't be the case. Yeah, it'll depend a lot. It's a very young field. And that really, we only have that one methodology to play with at the moment. But yeah, I think there's more opportunity for Holbrook farmers under some sort of biodiversity program than there is under carbon, unfortunately. But that's an interesting point you make, that it's not all about markets either. It's about your own account and using that to, you know, show carbon neutrality in your case, Richard.
The other thing that's really interesting is that when you look globally, and I have a mate in California who's put together all the FAO data on the emissions intensity of cattle around the world. I should send you the slide. It's a fabulous slide. She gave me a presentation. But what it shows is that Australia is, we're not sitting too badly. I mean, the intensive industries in the Northern Hemisphere obviously have less, you know, emissions intensity than we do. But, you know, I guess carbon taxes or whatever they are going to obviously affect the developing world much more than any of us. And that is, I think from a sort of social point of view, that's probably a great concern, because Africa and India by far have the highest emissions intensity. I mean, around 2,500 kilograms of CO2 per kilogram of product. So it's very high, whereas Australia averages sort of 50. So yeah, a lot of food for thought in this space. The more information you get, the more confused you are.
Yeah, unfortunately, that seems to be, and things change. You know, the science of the measurements, all that sort of thing are changing. You know, every day we hear of some new piece of information that's come through that changes, you know, a calculation or something like that. And so it is a changing field. Makes it very difficult to know what to commit to also, because you never know what's around the corner. But look, that's the reality with any of these sort of programs. It's been like that forever. And yes, the inequality is sort of built into the system a little bit, I think, Lucinda, unfortunately. Yeah, anyway. So any other comments? I'll just check the chat.
I have another question, Kylie.
Yep.
You mentioned you mentioned the value of a carbon, 1 unit of carbon credit in Australia being round about roughly, say, $16. And yet on a global market, it's roughly round about $100. If the market is global, how come the difference? Why doesn't all the buyers come over to Australia and buy our carbon credits cheaper and then spend them and waste them or whatever they do with them? Why is the difference if it's a global market?
Just so in this, I mean, that sort of thing does happen, but unfortunately, I think other countries have even cheaper carbon than us. It's quite a big impediment, the difference between different things. So, for example, you know, we look at, well, can we just, you know, we buy credits to offset, you know, our vehicle emissions or something like that. Can we do that as an organisation? Can we do that as, you know, a big regional organisation? Would that be a good thing to do? And the answer is it's actually cheaper to change the light bulbs in, you know, an office building in Thailand than it is to buy the carbon on the Australian market or buy the offsets through the Australian system. So there's a lot of perverse outcomes and perverse, you know, little systems that go on with these markets. But I actually don't know. Yeah, that is a good question. I don't know about whether there's a bit of pillaging of Australia's cheap carbon, but I think you have to do it under the ERF methodology.
Hi, James Saunders here. I can answer that one.
Oh, yeah, okay, go.
Depends on whether it's a compliance market or a voluntary market. Some of the requirements in Europe have got to be recognised and certainly go into a compliance market, so they don't recognise our credits. And it's not just carbon, it's actually the quality of the project as well, which often drives the price. So if you've got a carbon project that's got a biodiversity component in it, even though the actual carbon value might be the same, the demand from buyers is higher than, say, a cheap hydro project out of China, for example. So there's a lot of dynamics in terms of the quality of the carbon and whether it's a compliance, recognised in those compliance markets. So that's why you see those price differentials.
Thanks, James.
Thanks, James.
Yeah. So yes, is there any other questions? Nigel's just made a comment that the complexity of it means that maybe people just continue to plant trees for good intrinsically value reasons. And I think that does happen still. It's not all about money and markets. All I'm doing and presenting tonight is that side of it. But, you know, there's also a lot of reasons why, you know, as a producer and your own account, as Lucinda and Rick have pointed out, that if an individual farm wants to be carbon neutral, there's lots of opportunities to do that without having to enter, you know, credit markets or anything like that. And the mechanism to do that is to get an account that shows that. Look, given the time, and it doesn't look like there's any more questions, we might wrap it up there. Thank you very much. And I hope, like, there are some people in the audience here who know much more about it than me. I guess we're just responding to a lot of questions from producers about, you know, what is this all about? It's really hard to untangle the complexities and the language around, you know, carbon and environmental accounting. So I hope that people got something out of it. Alison, do you want to say anything to sum up?
Oh, look, just we'd love some feedback from you. You know, we're about to enter the next phase of our work with Landcare Australia and trying to design that. And so, you know, indications of the key concerns you've got, the questions that you've got would help us in that design process. But I guess from our perspective, we're looking at this as potentially a way that changes our role into the future. And so we're committed to ensuring that we're at the forefront of that and that we're bringing the members along on that journey so that you can be at the forefront if that's what you choose to be, but also that we're conducting projects like our long-term soil monitoring trials to make sure that we're keeping you, you know, with real data, with real information that you can trust, I guess, as you try and navigate this field. So I guess keep talking to us, because it is a dynamic area and that things will be changing, and we'd like to know if there are things that you're trying that that we can help you with, or help others with as well. You know, if you can let us know about those sorts of things, that'd be great. But yeah, I guess, you know, we're seeing this as something that's going to be in our future in whatever form it might be, and we'd like to help it be part of yours if that's what you choose as well. So thank you.
All right, thanks everyone. I'm happy to receive emails and messages on feedback. So thanks very much.
Thanks,
Thanks,
Kylie. That was great.
Thank you.